Yesterday, Chrysler notified nearly 800 dealerships that they will be closing their showrooms next month.
Later today, General Motors will tell roughly 1,000 of its dealers their days of selling GM vehicles will end by next year.
45% of dealerships closing permanently. $847 billion in unsold inventory rotting on lots. I'm standing in what used to be Heritage Ford in Omaha, Nebraska, watching auctioneers sell off everything from hydraulic lifts to coffee machines. This dealership served 3 generations of families for 67 years. It survived the Great Depression, World War II, and the 2008 financial crisis. But it couldn't survive 2025. The auctioneer just sold a $25,000 diagnostic computer for $800. Customer waiting room furniture that cost $15,000 went for $200. Even the American flag from the showroom sold for $12 to a scrap dealer who wanted the pole. I never thought I'd see the day, says Robert Morrison, whose grandfather started this dealership in 1958. We survived everything, but we can't survive customers who refuse to buy cars at any price. This isn't just about one dealership. This is about the complete destruction of automotive retail as we know it. And what's happening right now will change American transportation forever. The $847 billion graveyard. But to understand how 45% of dealerships are closing, you need to see the numbers that are destroying the entire automotive industry right now. $847 billion. That's the value of unsold vehicles sitting on dealer lots across America. To put that in perspective, that's more than the GDP of most countries. It's enough money to buy every house in Texas, and it's all tied up in cars that nobody wants. The average dealership is carrying 340 days of inventory. In a healthy market, 60 days is considered normal. 90 days is a problem. 340 days is financial suicide. I'm paying $127,000 monthly just to keep my inventory financed, explains Mike Rodriguez, who runs a Chevrolet dealership in Phoenix. That's $4,200 daily, whether I sell 1 car or 50 cars. Every morning, I wake up $4,200 poorer than when I went to sleep. Mike's dealership used to sell 240 cars monthly. Last month, he sold 18 cars. His monthly overhead is $156,000, whether he sells 1 car or 300. The mathematics are impossible. But here's what makes this collapse different from every previous automotive downturn. The cars aren't just slow sellers, they're actively becoming worthless. I'm walking through Mike's lot at 6 a.m. before customers arrive, and what I see represents the biggest automotive disaster in American history. Row after row of 2023 and 2024 vehicles that should be premium products but have become toxic assets. That Corvette Z06 cost me $89,000, Mike says, pointing to a yellow sports car that's been sitting for 267 days. I'd sell it for $55,000 tomorrow if anyone wanted it, but nobody even looks at it anymore. The Corvette represents everything wrong with the current market. It's an $89,000 sports car that gets 12 miles per gallon and requires premium fuel. In an economy where families are choosing between groceries and gas, it's become an automotive dinosaur. Therefore, Mike is trapped in a vicious cycle where his most expensive inventory generates the highest carrying costs while having the lowest probability of sale. But the bleeding gets exponentially worse when you understand what's happening to the vehicles themselves. Cars sitting on lots for 200+ days start developing problems from non-use. Batteries die from sitting idle. Tires develop flat spots. Paint fades from sun exposure. Rubber seals dry out and crack. Fuel systems gum up from stale gasoline. I have a 2024 Tahoe that won't start because the battery died, Mike explains, showing me a $78,000 SUV that's become a paperweight. The replacement battery costs $340, but I can't justify spending money on a car I can't sell. The irony is devastating. Mike is paying $67 daily to store a car that's becoming less valuable every day due to neglect he can't afford to prevent. But the real shock came when Mike showed me his survival strategy, the dealer death spiral. 3 months ago, Mike started what he calls liquidation mode. He's selling Chevrolets at 40 to 50% below cost just to generate cash flow and reduce inventory carrying costs. I sold a $65,000 Silverado for $32,000 last week, Mike admits, looking defeated. I lost $18,000 on the sale after factoring in my cost and carrying charges. But I stopped the daily bleeding on that truck. Mike's liquidation strategy reveals how desperate dealers have become. They're willing to take massive losses on every sale just to generate enough cash flow to service their floor plan debt and keep their doors open. But Mike's desperation tactics pale in comparison to what's happening at dealerships across the country. Tom Patterson runs a Ford dealership in Dallas that's been in his family for 43 years. Last month, he made a decision that would have been unthinkable just 2 years ago. He's converting his showroom into a used car lot. New cars don't sell, Tom tells me, standing in what used to be his F-150 display area. But I can make money on 10-year-old trucks with 150,000 miles. People want reliable transportation they can afford, not $80,000 pickups with features they don't need. Tom's showroom conversion represents the complete abandonment of the traditional dealership model. He's removing new car displays and replacing them with older, high-mileage vehicles that customers actually want to buy. I make more profit on a 2015 F-150 with 120,000 miles than I do on a new F-150, Tom explains. The used truck costs me $18,000 and sells for $24,000. The new truck costs me $52,000, and I have to sell it for $48,000 just to move inventory. Therefore, dealers like Tom are abandoning their core business model and becoming used car lots just to survive the new car apocalypse. But Tom's conversion revealed something even more shocking about customer behavior. Customers specifically ask for trucks with over 100,000 miles, Tom says. They want vehicles that have proven their reliability. They don't trust anything new because they've heard too many horror stories about electronic problems and expensive repairs. The customer preference for high-mileage vehicles represents a complete reversal of traditional automotive buying patterns. Instead of wanting the newest technology, buyers are actively seeking older, simpler vehicles they understand and trust. But the dealer death spiral accelerated when manufacturers started abandoning their own dealers. Last month, General Motors offered to buy back Tom's entire new truck inventory at 60 cents on the dollar. The manufacturer would rather take massive losses than continue supporting dealers who can't sell their products. They offered me $2.8 million for inventory that cost me $4.7 million, Tom explains. It's a terrible deal, but it would stop the bleeding and let me focus on vehicles people actually want. Tom is seriously considering the buyback offer, even though it would cost him nearly $2 million, because continuing to carry new vehicle inventory is costing him more than that in opportunity costs and carrying charges. Therefore, even manufacturers are abandoning their own products, offering to buy back inventory from dealers rather than continue supporting brands that have become unsellable. The community devastation. The dealership closures aren't just business failures. They're community disasters that are destroying the economic foundations of small towns across America. I'm in Broken Bow, Nebraska, population 3,400, where Morrison Motors has been the largest employer and economic anchor for 67 years. The dealership employed 47 people, sponsored the high school football team, and donated to every community fundraiser. Now, it's gone forever. This dealership was the heart of our town, says Mayor Linda Chen, standing in the empty showroom where community meetings were held for decades. When Morrison Motors dies, part of our town dies with it. The economic impact extends far beyond the 47 lost jobs. The parts suppliers, delivery drivers, and service contractors who depended on the dealership are also struggling. The local bank that financed customer car loans is losing business. Even the coffee shop across the street is closing because it lost its biggest customer base. We're looking at 200-plus jobs lost when you count all the ripple effects, Mayor Chen calculates. In a town of 3,400 people, that's devastating. But the community devastation goes deeper than just economics. Morrison Motors was where 3 generations of families bought their first cars, where teenagers got their first jobs, where community leaders gathered to solve problems. The dealership was woven into the social fabric of the town in ways that can't be replaced. My grandfather bought his first truck here in 1958, says customer Robert Park. My father bought every car he ever owned here. I bought my first car here when I turned 16. Now my son will have to drive 200 miles to buy a car. The loss of automotive retail infrastructure is creating transportation deserts where residents have no access to new vehicle sales, warranty service, or parts. Rural communities that survived the decline of farming and manufacturing are being finished off by the automotive retail apocalypse. But the community devastation is spreading beyond rural areas to suburban and even urban markets. In Phoenix, a metropolitan area with 5 million people, 23 dealerships have closed permanently in the past 18 months. These aren't small rural dealers. They're major franchises in prime locations that served thousands of customers annually. We're seeing dealership closures in markets that should be thriving, explains automotive analyst Maria Santos. When dealers can't survive in major metropolitan areas, you know the entire system is broken. The Phoenix closures are particularly shocking because they include luxury brands that were supposed to be recession-proof. BMW, Mercedes, and Audi dealerships that survived every previous downturn are closing permanently because even wealthy customers are rejecting new vehicles. Therefore, the dealership apocalypse is affecting every market segment and geographic area, proving that this isn't a temporary downturn, but a permanent restructuring of automotive retail. But the most shocking aspect of the community devastation is how quickly it's accelerating. The acceleration effect. The dealership closures are creating a cascade effect, where each closure makes the remaining dealers more vulnerable, accelerating the collapse beyond what anyone predicted. When Morrison Motors closed in Broken Bow, customers had to drive 120 miles to the nearest Ford dealer in Grand Island, but the increased customer base overwhelmed that dealer's service capacity, creating longer wait times and frustrated customers. We went from serving 8,000 customers to serving 12,000 customers overnight, explains David Rodriguez, who runs the Grand Island Ford dealership. Our service department is booked 6 weeks out. Customers are furious about the wait times. The service bottleneck is driving customers away from Ford entirely. Instead of waiting 6 weeks for warranty work, they're buying non-Ford vehicles from dealers with available service capacity, or choosing older vehicles that can be serviced anywhere. Therefore, each dealership closure reduces customer satisfaction at remaining dealers, accelerating the brand abandonment that's driving the entire collapse. But the acceleration effect gets worse when you understand how floor plan financing works. Banks that finance dealer inventory are becoming increasingly nervous about the automotive sector. As more dealers default on their floor plan loans, lenders are tightening credit standards and raising interest rates for surviving dealers. My floor plan rate went from 4.2% to 12.8% in 8 months, explains dealer Tom Patterson. The bank says I'm a higher risk because so many other dealers have failed, but the higher rate makes it even harder for me to survive. Tom is trapped in a vicious cycle where other dealers' failures make his own survival more expensive and difficult. The acceleration effect is punishing successful dealers for the failures of their competitors. But the most shocking acceleration came when manufacturers started consolidating their dealer networks. General Motors announced last month that they're reducing their dealer count by 40% over the next 2 years. Instead of supporting struggling dealers, they're terminating franchises and consolidating sales through fewer, larger locations. GM told us they want 60% fewer dealers serving 100% of the market, explains terminated dealer Jennifer Walsh. They're abandoning rural and suburban markets entirely, focusing only on major metropolitan areas. The manufacturer consolidation is accelerating dealership closures by design rather than market forces. Companies are actively terminating profitable dealers to reduce their retail footprint and cut support costs. Therefore, the 45% dealership closure rate isn't the end of the collapse. It's just the beginning of a planned contraction that will eliminate most automotive retail infrastructure. Get my free guide. Avoid these 17 cars in 2025. By visiting the link in the description, understanding which dealers will survive is crucial for warranty and service support. The survival strategy. The dealers who are surviving the apocalypse aren't the ones with the best locations or the most inventory. They're the ones who abandoned traditional automotive retail entirely and created new business models. Sarah Martinez runs what used to be a Nissan dealership in Phoenix. Instead of closing when Nissan terminated her franchise, she converted the facility into an independent used car lot specializing in vehicles over 100,000 miles. "I make more money selling 10-year-old cars than I ever made selling new Nissans," Sarah explains, standing in what used to be her new car showroom. Customers want reliable transportation they can afford, not $50,000 SUVs with subscription-based features. Sarah's conversion strategy is working because she's giving customers what they actually want instead of what manufacturers think they should want. Her lot is full of high-mileage Hondas, Toyotas, and domestic trucks that customers trust more than anything new. "I sold a 2012 Pilot with 180,000 miles for $14,000 last week," Sarah says. The customer specifically wanted high mileage because it proved the vehicle's reliability. Try explaining that to a manufacturer. Therefore, the surviving dealers are those who recognize that customer preferences have fundamentally changed and adapted their business models accordingly. But Sarah's success revealed something even more important about the future of automotive retail. "My customers become evangelists," Sarah explains. "When someone buys a reliable, high-mileage vehicle from me, they tell everyone they know. Word-of-mouth marketing is more powerful than any manufacturer or advertising campaign." Sarah's customer loyalty is built on delivering value rather than pushing products. She helps customers find vehicles that meet their actual needs instead of trying to sell them the most expensive option available. The contrast with traditional dealerships is stark. While new car dealers are begging customers to take vehicles at massive discounts, Sarah has customers calling her looking for specific high-mileage models they're willing to pay premium prices for. But the most successful survival strategy came from dealers who completely abandoned automotive retail. Mike Chen used to run a Honda dealership in Dallas. When Honda terminated his franchise, he converted the service bays into an independent repair shop, specializing in vehicles over 100,000 miles. "I make more money fixing old cars than I ever made selling new ones," Mike explains. "People are keeping their vehicles longer, so they need more maintenance and repair services. It's a growing market while new car sales collapse. Mike's repair shop is booked solid because customers are choosing to maintain their existing vehicles rather than buy new ones. His expertise with older vehicles makes him more valuable than dealers who only know how to work on current models. Therefore, the smartest dealers are pivoting to service-based businesses that support the growing population of customers who are keeping their vehicles longer." The new reality. The automotive retail landscape emerging from this collapse will look nothing like what Americans have known for over a century. The changes are permanent and fundamental, reshaping how vehicles are sold, financed, and serviced. The 45% dealership closure rate represents the elimination of over 8,000 automotive retail locations that employed 400,000 plus Americans and anchored thousands of communities. These jobs and businesses aren't coming back because the market conditions that supported them no longer exist. We're witnessing the end of the traditional dealership model, predicts automotive analyst Robert Chen. The survivors will be smaller, more efficient, and focused on used vehicles and service rather than new car sales. The new automotive retail landscape will be dominated by online sales platforms, manufacturer-owned stores, and independent used car lots. The massive showrooms and huge inventories that characterize traditional dealerships will disappear, replaced by smaller facilities that stock 20 to 30 carefully selected vehicles instead of 300 to 400. But the most significant change is the shift in customer behavior that's driving the entire transformation. American consumers have fundamentally changed their relationship with transportation. The idea that everyone needs a new car every few years is dying, replaced by a preference for reliable older vehicles that customers understand and trust. People have learned that newer doesn't mean better, explains customer behavior expert Patricia Walsh. They want transportation that works, not technology that fails. The automotive industry created this problem by prioritizing features over reliability. The customer rebellion against new vehicles is permanent because it's based on real experiences with unreliable modern cars and unaffordable ownership costs. No amount of incentives or marketing can overcome the fundamental trust breakdown between manufacturers and consumers. Therefore, the dealership collapse represents more than just business failures. It's the market's response to an industry that lost touch with customer needs and priorities. The communities losing their dealerships will adapt by embracing alternative transportation solutions. Car-sharing services, public transit, and remote work arrangements will replace the car-dependent lifestyles that sustained automotive retail for decades. The manufacturers that survive will be those that adapt to the new reality of reduced demand and changed customer preferences. Those that continue trying to sell complex, expensive vehicles to customers who want simple, affordable transportation will join the dealership graveyard. Next week, I'm revealing something that will shock you about the deals that are available right now because of this collapse. While 45% of dealerships are closing, the survivors are offering discounts that seem impossible, like $70,000 Jeeps for $19,000. I'm talking about July 2025. Deals that are so aggressive, they're destroying manufacturer profit margins just to generate cash flow. But these deals won't last long as inventory gets liquidated and dealers close permanently. Hit the bell icon so you don't miss that video, because the opportunities I'm going to reveal are time-sensitive and limited to specific inventory that's disappearing fast. The car market collapse has started, but smart buyers can still benefit from the chaos. The question is whether you'll act before the opportunities disappear forever.